In this video, I'm going to walk you through an extremely powerful end-to-end trend trading strategy from start to finish. I'm going to go through all of the rules, all of the theory, all of the practicalities of it, and show you some real live examples so that you can go away from this video and immediately start trading this thing to your advantage. So you're going to want to grab a pen and paper for this one, because you won't need to learn anything else about trend trading once I share with you what I'm about to share with you. Now I'm going to just start by saying that most traders fail at trading because they don't have consistent sets of rules, and they're not disciplined enough to execute on those rules over and over again. And I want you to think of this like a cockpit checklist. You need something that's going to tell you what to do so that you're not thinking in the moment and making up your mind. And because at different times of the day, at different days of the week, at different months of the year, you're going to have different kind of emotions, different chemicals going through your body that are going to make you feel differently. And what we want to do is be able to approach the market in a way that's the same every time. So when you get onto an aeroplane, you go in and you give them your ticket and you go to sit down and you look in the cockpit, and there's like a 60-year-old pilot or a 50-year-old pilot who's done thousands of these flights, and they're going through a checklist. And the reason they're going for a checklist is not because they don't know how to fly the plane, but they know that if they follow that checklist, they remove human error, they remove emotion, and the probability of having a successful flight is way, way higher than them just relying on their emotions. So the first thing we're going to need is a checklist. And I'm going to be giving this checklist to you guys. You can go and get this checklist in the description, but before you use it, you're going to need to know how to use it. So first of all, let's break that down. So I want you to think of baking a cake. Think of your trading strategy as baking a cake. Well, if you buy a chocolate cake from the supermarket, the price is going to be relatively low. The quality of the cake is going to be relatively low, okay? The difficulty of getting your hands on that cake is going to be pretty easy. The flexibility of the cake is low because you get what you're given. And in the trading world, that'll be the same as buying an algorithm online. Get it? Now, if you was to buy a chocolate cake from a restaurant, well, the price might be a little bit higher, might be a medium price. The quality of the cake might be medium. The difficulty of getting the cake is low to medium, because you've then got there's some friction in the way of going to the restaurant, booking the table, the rest of it, right? Having the funds. And then the flexibility is still low because you get what you're given on the menu. And then in the trading world, that would be adopting a pre-made strategy from, say, a financial advisor that's a little bit safe. So when we take that a step further, you could buy a chocolate cake made by a world-class chef. Well, when you do that, the price is medium to high. Okay, you go to a Michelin star restaurant. The quality is very, very high. The difficulty in locating a chef is quite high. The flexibility is still low because you still get what you're given. And in the trading world, that would be adopting a pre-made strategy from a world-class investor. Maybe you're looking over the shoulder of a very respected trader or investor. And then finally, you get a pre-mixed cake box and you make it yourself. And in this instance, the price is very low, okay? The quality is medium to high. The difficulty is medium. The flexibility is very high because it's up to you to make the thing and do what you want with it, right? And in the trading world, that is learning the ingredients of a successful strategy and then developing it further over time to refine it, to make it yours, to build your personality and lifestyle into it, and to develop your edge. And it's those people who become world-class, consistently profitable traders. And that's what I want you to become. So the first thing we have to understand, and you're going to want to write all these down. So the first thing we need to learn are the 6 principles of trading a trending market. Okay, number 1 is the market condition. Number 2 is the market phase. Number 3 is support and resistance. Number 4 is indicators. Number 5 is price action patterns. And number 6 is candlestick patterns. So what I want to do is go back to the checklist now, and we're going to work through each one of these, and I'm going to show you what each of these mean. Then we're going to go and take a look at an example, and then I'm going to go out into the live market and show you a real live example. So let's get stuck into that. So first of all, market condition. We need to identify clearly every time the same way if a market is oscillating, whether we are bullish, bearish, or moving sideways. So Markets move up in a bullish trend from bottom left to top right, where we're putting in higher highs and higher lows, and that is a bullish trend. Okay. And in the real live market, it looks a little bit like this. It's not as pretty as a black line on a white chart, on a white background, but it's still, you should be able to identify these things. You should be able to identify when we've got higher highs and higher lows, that means we're in a bullish trend. And a bearish trend, it's the opposite. We're putting in lower lows and lower highs, and we're going from top left to bottom right. And in a real live market, it looks like this. Okay, this is a screenshot from a real chart. When the market's moving sideways or ranging, we call this a ranging market, where we've got sideways structure or structure consolidation, where we're respecting the same horizontal highs and lows over and over again. And this is an example of sideways consolidation or a ranging market, where there's lots of opportunity there if you know what you're doing. And then finally, we have the choppy and indecisive markets, where it's erratic structure violations. It's going, there's no real direction. And in my opinion, you want to stay out of that. There's not much, unless you're trading like ratio patterns and things like that within there. And don't get me wrong, there's a toolbox of strategies, and we teach them at Tier 1 Trading that you can trade in these zones. But this video is purely about giving you the information you need to trade a trend strategy that's very, very powerful and very, very profitable. So once we've identified the market condition, we then want to start looking at what phase we're in that market. So what do I mean by phase? Well, the market, if it's a trending, it's moving in two phases, a run and a pullback, okay? Or an extension and a retracement, okay? And I've indicated what those look like here. Every time we're moving up, we're in a run, in a bullish trend. Every time we move down, we're in a pullback, and a run and a pullback. And you can see that very clearly here. And in another example here, what we're looking to do is to buy after the pullback and then sell after the runs. Okay, that is a trend continuation. That's a trending trade setup. Once we, so if we're looking for a market condition, say bullish, the next thing we're looking for is what phase we're in. Well, we want to be in a pullback phase, okay, because that's when we're setting up for the next buy to the upside. Next thing we want to look for is support and resistance. So angular, horizontal, or trend lines. So what you'll see is in price action, certain levels are respected over and over again. They're very, very predictable. And what was support once before will be support again. And the more times that level's tested, the more respected it is. And the more, higher, more degree of certainty you've got that it's likely to respect that level again. So we see what we're doing. We're stacking up some confluences here. We're starting to stack up some confluences. So you'll see this, strong resistance levels where there's a minimum of 3 tests on a higher time frame, respected time and time again. Another thing that you see in terms of support and resistance is by price. So even handle numbers. When you go to the gas station and you fill up your car and you try and get it right on the penny, well, that happens in the markets as well. And you'll see in this example here, all of the 0.9 flat levels or the 0.0 levels or the 50 levels are identified by either bold or light dotted lines on this chart. And I recommend you go and practice just drawing in horizontal lines at these levels, scrunching up your chart, zooming out and seeing for yourself how well these are respected in certain markets. I think you'll be blown away. So what we also find is when the markets are trending is that resistance, which is in the run phase, and then we get the pullback, the support, the resistance becomes the support. The previous resistance becomes support. And we see that in nice harmonic trends play out all the time. We also see this in angular support and resistance as well. So you can use trend lines. If you're familiar with trend lines, you're drawing the trend line under those support levels and you'll see that it's respected a lot of the time where we see these tests respected over and over again. Same with a downward trend, okay? And also we see structure swaps. So what was resistance becomes support even on an angular trend line, okay? So we're identifying whether or not there is support and resistance previously once we're in that pullback zone. All right, the next part of the checklist is deceleration, okay? This is where we're looking for, in that pullback move, we're looking for price to start to decelerate or slow down. And the best way to identify that is when you can see ever so smaller candles or a struggle in momentum as we approach that support or resistance level in that pullback zone, okay? Because if the candles are running out of steam and likely to continue onto the upside after they've run out of steam, we want to see that deceleration. There's a likeliness chance that we're going to continue with the trend if we can see a deceleration. If markets are going, and building higher and they're getting bigger and it's higher momentum, then the chances are that's going to continue up, right? And we're not going to get the pullback. So where we would be looking for a deceleration candle in a bearish trend, for instance, is on the pullback. We'd be looking for deceleration at the top of the pullback. And in a bullish trend, we'd be looking for deceleration on the bottom of the pullback. Next thing we want to look for is indicators. So 50 EMA zone, right? So what I mean by indicators is don't go out and make your chart look like this. There's lots of people filling their charts with indicators, and you just don't need that many indicators. In fact, what that will do, it will give you paralysis by analysis. You'll end up with conflicting trading decision ideas, and one thing will be telling you to go short, one thing will be telling you to go long, and you'll be stuck. Okay, so what we want to do is just use a couple of indicators, and what I like to use is the exponential moving averages, and I use a series of them because when you stack them together, it adds confluence and confirmation and weight to the entry. If they all line up, if they're all telling us the same sort of thing, we know that there's a higher probability of this thing playing out. Okay, so what we're looking for here, and a lot of professional traders like to place orders around the 20, 50 and the 200 exponential moving averages. And what you'll see as well is price respects these levels as well. Okay, so we see price respecting these levels. And what we're looking for is a dip on that run. We're looking for the run, then we're looking for the pullback, and then we're looking for support and resistance. Okay, number of touches. I'll talk about that a bit more in a minute. And then we're looking for a dip into that 20-50 exponential moving average zone. So between the 20 and the 50, we want to dip into that before we start looking. Once we see that deceleration, to look for an entry, we want to start seeing that 20-50 zone being tested. Okay. And then there's MACD convergence and divergence, and really what that is to identify whether or not a trend is likely to continue on or it's likely to run out of steam and reverse. But we're not talking about that too much in this particular video. What we're really looking at now is a candlestick entry. Okay, now a candlestick entry, what the candlesticks we're looking for are either a high test candles, right, or a low test where basically it looks like there's been a rejection to the upside, and that's what you'd be looking for if you was looking for a bearish trend. So at the top of the run, we decelerate, we go into support resistance, we go into the 20-50 zone, and then we put in a candlestick signal that looks like this. And if we're in a bullish trend, we're waiting for the market to pull back down into support resistance, into the 20-50 zone, look for deceleration, and then we're looking for a candle signal that looks like this. Can you imagine stacking all this into one approach and how high probability your moves will be, right? No more losing money. The other candle you can use is a doji. Okay, so in my opinion, the low test is going to be the highest probability move, or the most aggressive, where you're going to be able to get in straight away. The doji is not going to have as high strike rate, but it can still be used very, very powerfully if you're stacking up all this confluence. And then the other one would be tweezer tops or tweezer bottoms. Okay, so tweezer tops and tweezer bottoms are where we've got equal. The open and close are in the top 50% of the body, and then we've got equal lows. Okay, and they look something like this. And then on top of this, you could add on your own preferred analysis, where you're looking for a different number of touches of support and resistance before you even consider the trade. Maybe you look for the convergence or the divergence on the MACD and things like that. But I'm just going to stick with the 6 things. So we're looking for identifying the market condition, then the market phase, then we're looking for support and resistance, then we're looking for market deceleration, we're looking for indicators, the EMAs, the 20-50 zone, and then we're looking for a candlestick pattern. Okay, so let's take a look at an example now, right? Let's go. So in this example, we're looking at a bullish trend. Okay, so the market condition is bullish, it's visibly oscillating, and we're going bottom left to top right, putting in higher highs. Okay, the next thing we're looking for is the market phase, which we know that we're in a pullback. We've got the run, pullback, run, pullback, run, pullback. Okay, we're in a pullback phase. The next thing is we zoom out and we look for support and resistance, and the market's reacting to many touches of that level. We've got 2 support and resistance lines with 6 previous touches. So we've got the horizontal and the angular here with 6 previous touches, okay, as we push into that zone. We've also got market deceleration. Can you see how the market's putting in smaller and smaller, more higher rejection candles as we dip into this zone each day? We've got dojis, right, low test wicks, which is great. We're also pushing into the 2050 exponential moving average zone. So what we can do is tick all of these boxes. We can tick all the boxes and say we've got the condition, the phase, the support and resistance, the deceleration. We're in the 2050 zone, okay? And now we just need to look for those candlestick entries. And once we get the candlestick entry, which we know we've got this low test candle here. How we get into this is we place an order, right? 3 or 5 pips above the last daily high. So that signal candle high. And the stop loss goes 3 to 5 pips below the low of that signal candle, okay? And then the way that we manage this trade is we take profits at the last swing high. And in this instance, this is nearly a 3-to-1 reward to risk profile, okay? So that's an example on paper. Let's go out and take a look at a real live example in the charts now. Okay, so what we're looking at here is the New Zealand dollar against the Japanese yen, and you can see just recently we've been putting in new highs, higher lows, you know, and we've been basically just putting in this new high here. Okay, now as we are in this condition, what condition is this? Well, this is a bullish. So let's just say condition bullish. Okay, tick. We can put a tick on that, right? Now, what phase are we in? Well, so let's just draw these out. Phase, we'll put in support and resistance. We'll put in indicators or EMA. Then we'll put in price, action, or deceleration. Let's put decel, and then we'll put candle. So we've got our condition. At the moment, we're in a run phase, but you can see here that we started to pull back, right? So we were in a pullback phase. So we can now go, okay, well, yep, let's cross that off. We're in the pullback phase. Now we're looking for support and resistance. So if we bring on our horizontal line and we look at where the market's trading right now, okay, look, we dipped right down into here. So we've got this kind of pullback down into this support and resistance zone. One, we've got a previous test here. Okay, so we've got this previous test here. We can also zoom out and we can see how many tests of that level we've actually got. So we've got one here, right? We've got one here, we've got one here. Okay, we've got a little bit here as well. You can go back and back and you can see, look, you got another couple here as well, right? So it's a powerful level of structure, right? Which is great. We now know that we're onto a pretty decent setup because we can now cross out this line. So we can just go, okay, well, we've now got support and resistance. Great. 2050 moving average zone. Okay, well, are we pushing into the 2050 moving average zone? Well, this candle didn't. This candle here didn't, but this one did. See this? So this one did. So we have got to cross off the 2050 exponential moving averages. We've also got deceleration because look what happened. We had this big bullish run. We had this big momentum to the downside. We had a bit of a gap and then we held. This is an indecision candle. This is a doji or a low test, right? And then we had another one. So we've already got and this is even more of a doji than this one. So we had deceleration in price. We've got the market condition bullish, the phase is in a pullback, tick. We've got support and resistance, tested 6 times minimum. We've got our exponential moving average zone. We've got deceleration. Now we just need the candlestick pattern for the entry. And what is the candlestick pattern? Well, this actually did both of the jobs. We got the deceleration confirmed. We got the 2050 moving average confirmed. And we got the candlestick pattern that we need, which is a low test candle. So what we do is we place our buy stop order a couple of pips above that high. Once it's closed, we place our stop loss order a couple of pips below that low once it's closed, and then our target is up at the previous high right here. Okay, and as you can see, we just smashed through that, and in this case, this particular setup wasn't a 3-to-1, but it was still a nice 1.5-to-1, which is pretty good. Okay, so there's an example, and the thing you need to take away from this is don't settle for anything less than stacking all of these confluences, because when you get all this right, you're going to have the highest probability setups, the best reward to risk ratio, you're going to be right more than you're wrong, and you're just going to have a much better time trading. So what I want you to do is go away, practice this, go and get the checklist. Let me know in the comments if you want another strategy, a reversal strategy, and I'll consider doing that. Just type in reversal into the comments and keep me up to date. Let me know how you got on. If you love what you learn here, go and check out tier1trading.com or consider joining my 30-day trader challenge if you really just want to get your feet wet. And until next time, thanks for watching, take care, and I'll see you in the next one.